Good afternoon, everybody. My name is Mayo Akuyoro. I'm a partner at McKinsey & Company, and I lead the work that we do with fintechs across Africa. And I'll be your moderator and expert for this panel, so I have a two-in-one role this afternoon. The title of the panel is Winter Coming for African Fintechs. Africa's financial technology is one of the most promising sectors, with revenues expected to soar to 30 billion by 2025. Yet there are many hurdles still to be crossed. The consequences of the pandemic, combined with those of the Ukrainian war, are slowing down venture funding globally. There are complex and variable regulations, including licensing approval processes, as well as allegations of poor internal governance, have made it difficult for fintechs to ensure compliance across markets and business continuity. Could this be the perfect storm that pops the African fintech bubble? How can startups remain vigilant in an uncertain economic environment and focus on creating a sustainable long-term fintech ecosystem? These are some of the topics that we will be discussing this afternoon. But before I introduce the panelists, I'm just going to give a few words to sort of set the scene and introduce the topic we're going to be discussing. At McKinsey, we wrote a report about three or four months ago around the fintech ecosystem in Africa, and the title of the fintech report was "This is the End of the Beginning," and the reason we called it "This is the End of the Beginning" is the more we spoke to fintechs, we spoke to investors, we spoke to incumbents, we spoke to regulators. And one of the big sort of common themes around the conversations we had was the fact that the African fintech ecosystem, actually the financial services ecosystem, is sort of, getting to the end of the beginning of the S-curve. So we've seen quite a lot of growth. We've seen quite a lot of activity, and we're beginning to mature as a industry. And we are seeing that the financial services ecosystem is sort of experiencing a structural shift in the way people are interacting. More and more people are using their mobile phones to make payments. More and more people are interacting with their financial institution sort of completely digitally, and we're seeing that fintechs are helping to drive this shift. One of the interesting facts, actually, as we did the report, was we found that the penetration of fintechs in the financial ecosystem in Africa actually mirrors some of what you see in more developed markets. And by penetration, we are talking about sort of the total revenues of fintech companies over the total revenues of the financial services ecosystem. One of the defining markers of fintechs in Africa versus other markets is that we have very different types of players in the space. You have the incumbents sort of spinning off sort of their own fintech or payments verticals. You have telcos who in some markets are predominantly the drivers of financial sort of digital financial services. And then you have what I will call the early stage or disruptors who are also participating in an industry. And in some markets, so Africa is around 3 to 5%. In some markets, such as Kenya and Ghana, you have the penetration as high as 12 to 15%. The third point I will make is that they're seeing the same growing pains, and we'll discuss some of this in the panel today, as what you've seen in more advanced markets. There is increasing pressure to scale. There's compliance and regulatory pressure. There is the question around how do you professionalize with growth? And then finally, and I think this is something that is actually common to anyone who's operating in this market, securing the right talent and funding throughout the development cycle. Be that as it may, we do think that there are several opportunities for fintechs as they mature. One of the things we think about is sort of scaling country champions to regional presence, including through mergers and acquisitions. We've seen some of that in the early stage industry in the last couple of months. The second one is really developing enhanced B2B offerings. A lot of the big fintechs you see have very strong B2C verticals, and there's a question around how do you sort of take advantage of being a sort of a provider to businesses and enterprises. And then the third, and this is one white space, we looked at a lot of the white spaces on the continent, is sort of increasing the retail and SME penetration of lending. In some markets, retail lending is less than 1%, and if you see what a lot of players are doing today, there is a lot of movement there. So what is fintech? Everyone says fintech, 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 and apologies for the quite busy slide. I'll try and explain what it is. Essentially, we try to lay out all of the verticals we saw sort of fintechs playing in. As you go from the left-hand side, where it's simple account management, to blockchain and crypto, which is sort of the more advanced financial services, we see sort of 8 verticals or consumer-facing verticals with an underlying infrastructure layer. And then at the top of it, you have sort of neobanks, super apps who may strive more than one vertical. The interesting thing is, as we looked across the continent, one of the questions we asked ourselves is, where do you see white spaces in each one of these verticals? And the answer differs market by market. So even though the report is called African FinTech, African FinTech Landscape, the shape and the flavor of this sort of differs depending on the markets that you are looking at across Africa. But as we looked across the continent, I think the one thing that we felt was common actually is that the payments rails and the fundamental rails that is driving a lot of the activity has been laid in a lot of our key markets across Africa. This chart just basically lays out the landscape from consumer and business, and you can see for the most part, if you look at the fintechs that are operating on the continent, you'd see that a lot of them are either in sort of wallets and B2B and peer-to-peer payments, bill payments, remittances, offline and online, or some form of that. Where as you move towards the right and the more complicated financial services, such as sort of the business services, SME lending, retail lending, and so on and so forth, we do see that there's quite a bit of room to grow there. We then sort of did an experiment to say, look, if countries in Africa look like, if countries in Africa look like a Kenya today or Ghana today, what is the size of the revenues that are at stake? And we believe that fintechs can grow up to 8x over the next 5 years if the penetration of what I would call non-traditional financial services sort of matches some of our peer markets on the continent. And I talked about the challenges already, so reaching scale and monetization, and that's becoming increasingly important given the environment that we are operating in right now. We started this report somewhat towards the end of last year, and it came out in August. Very, very different funding landscape, very different even macro and geopolitical landscape. So there's really pressure on scaling and monetization. The second is navigating an uncertain environment. I think if there's one question that investors always ask us, they always ask us about the regulatory landscape. They ask me, what do you think is going to happen to regulation? And I tell them I don't have a crystal ball. So this is a thing that is top of mind for investors, top of mind for operators, and is, again, another topic that we will definitely explore. The third, and I'm sure a number of you have seen the headlines, both actually in Africa, but also outside of Africa in the last couple of weeks, around corporate governance foundations. And you see that sort of manifesting in so many different ways. One of the things that we're seeing as companies mature, actually, is this is becoming increasingly a focus for founders and operators in this climate. And then finally, just managing scarcity in terms of finding the right talent. People talk about the fact that there is, I actually find this a very, it's a very interesting and very paradoxical issue that we have in the climate that we work in, because Africa has one of the largest working age populations, yet we're not able to find the right talent. So there's really a mismatch between what is being produced and what employers are looking for, and then also funding, but we'll explore that a little bit with our panelists. And then finally, one of the things, I think the themes that have come out of this, the last 2 days, is really around how can all the players within the ecosystem sort of come together to ensure that we are helping to sort of birth the true potential of the fintech industry. And we sort of have three buckets, so regulators, incumbents in fintechs, and investors. I think the first one that we hear really all the time is around promoting sort of predictable regulation so people understand what's coming, formalizing data systems and ensuring sort of this consumer protection, keeping up to pace with changes within the industry. For incumbents and fintechs, building talent and training them is going to be a key thing for us to really sort of not be constrained by what we have on the continent, building partnerships with each others, but also with the regulator. I think this is one area that I would say fintechs have a lot to learn from incumbents and how they engage their regulators. And then finally, from the investor side, sort of looking to your home markets, educating investors in the African market about potential opportunities, and then focusing on value over valuation. So with those few thoughts, I would love to call the panelists on stage. So I will start with Ida. Ida is the VP for Sub-Saharan Africa for Visa. Are we going to have the lights on? I was told there was going to be cool music, so. Right, welcome, Ida. Next on stage, I will call Babs Ogunde, who is the CEO of Kuda Bank. Thank you. Then I will ask Omar Sis, who is the CEO of InTouch, to please join me on stage. There we go, cool music. Then Jessica Anuna, CEO of Clasha. And finally, Pardon Mujakachi, who's the Vice President of Strategy and Partnerships for Chipper Cash. Thank you very much. So Ida, I'm going to start with you. There's been a lot of hype and activity around the level of disruptions that's anticipated in the fintech arena. How would you characterize the developments in the fintech space, and what should we be excited about? Should we be excited?
Hello. We should definitely be excited. Couple of things that we see as we look at the landscape. The first one has to do with the evolution that we've seen over the past years. So when you look at what was referred to as FinTech 1.0, it was about players coming into the landscape and looking at specific use cases, person-to-person transfers, savings, and investments, separate apps. Fast forwarded after COVID. By the way, COVID has been a catalyst of digitization, as we know. We're now looking at, the slides that you presented, actually, with fintechs now offering integrated solution, bundled offers, and creating, complex platforms. And this is very much in line with the needs of the market, especially in sub-Saharan Africa, where we still have a gap to digitize payments and offer a solution to long-tail, customers and long-tail merchants. You couple that with the environment that is becoming increasingly open, having access to data, having access to analytics, which makes the offering even more consumer-centric and focused. The one thing that we need to look at, and I talked about it in an earlier panel, is, how the lines are getting blurry between the fintechs that are now turning into banks, banks that are now evolving their operations and becoming fintechs, and then fintechs getting close to the regulator and enabling, payments for governments and even being involved in central bank digital currencies. So the industry is extremely vibrant. There is a need to digitize, cash and drive financial inclusion, definitely. The question is really, how do we bring all the stakeholders together to really design the right value proposition for the ecosystem in line of the the needs in different markets?
Thank you very much, Ida. Omar, I'm going to come to you because I think you're doing very interesting things both offline and online. What should we be excited about with what fintechs are doing for Africa?
Yeah, what I firstly noticed is that maybe when we were starting in touch 7 years ago, when we were coming to try to discuss with the regulators, the telcos, maybe they were just saying, okay, who are these guys? What are they doing in the value chain? Maybe they were just destroying value. And when we compare that to what is happening today, what we heard yesterday, all the day long, the fintech companies are now in the center of all the discussions because we've noticed that we are now real players in the ecosystem, and people need us. I can put it like that. When you look at the numbers, we were talking about financial services globally, but when you look at the numbers related to mobile money, to deep dive on that, last year, we were talking about the crisis since the COVID, but last year in the world, we succeeded to have more than 1,000 billion dollars transaction only on mobile money. So it means that it was a growth of 31% despite the crisis that we are observing. So it means that something is really happening based on the financial services. And when it comes to the fintechs themselves, what we are observing today all over the world, financing is being a nightmare, let's say it like that. It is more and more difficult to get financing. But when it comes to fintechs in Africa, we can see a growth. If you compare what has been raised last year compared to this year, this last 6 months, at least $3.5 billion have been raised in Africa, with a growth at least 30%. So it means that it is getting well. But people don't talk a lot about it, but what we should know is things have changed. Unfortunately, 2 years ago and 3 years ago maybe, when startups were raising money, we succeeded to have very, very good valuations. But today, the valuations have been reviewed, and they have decreased a lot, and some startups are today raising funds with valuations that are less than the valuation they had 2 years ago. But it's because of the crisis. We have to do with it.
Thank you. We'll explore that topic a little bit later. Perhaps Omar mentioned that we've raised $3.5 billion, 30% growth from last year. When you see the numbers, at least Africa seems to be bucking the trend a little bit compared to the rest of the world in terms of amount of funding raised. Has that been your experience? Because it'd be good to hear from you as a founder who's sort of raised funds. And do you think that 2023 will continue in that direction?
I think to really answer that question properly, we need to have things in context. So the reality is, it does sound like, Africa has been African companies have been raising significant amount of capital. But if you compare it to the global capital that's been raised, it barely scratches the surface compared to the work and the opportunity that's on ground. I think the second thing also is African companies are relatively, especially we're talking specifically about technology now, technology companies is still a relatively new phenomenon in Africa. I think only recently we had, a handful of companies that have raised sort of $10 million and above, just to give an example. So of course, it doesn't mean that African companies are immune to the global crisis and the economic meltdown, but it's just the fact that most companies are just not at that level. There are not that many companies at growth phase, so you won't notice the drop in funding, just because we just weren't getting the funding in the first place, compared to sort of global. And the slowdown really affected mostly growth companies at significantly high valuations. And typically, African companies, contrary to what many believe, the valuations are actually not significant compared to the counterparts. So if you look at it in terms of number of customers, total value of transactions, global companies are commanding significantly more, significantly higher valuation. So because of that, we haven't seen sort of the drastic sort of drop in funding. So yeah, that's what I think is the main thing. But African companies are not immune. 2023, we'll see if there are more companies that break that barrier in terms of sort of growth phase. I think that's going to be the real determinant of, is this affecting African companies or not?
Jessica, let me come to you. Do you think it's harder, if I were a founder, do you think it's harder to start to raise funding? I think Babs gave a very good explanation of, look, depending on what stage company you are, sort of your experience with fundraising is slightly different. Do you think it's going to be hard? Is it harder now? Do you think it's going to be harder in the future as a founder?
Yeah, I think we had quite a unique experience at Clasher. We raised money really early on when we hadn't even launched the business last year, and I've continued to raise since then. I think seed companies typically are easier to get funded in Africa. I think a lot of VCs, especially in America, understand that Africa is the fastest growing continent in the world. It's easier to get to economies of scale than in frontier markets or OECD economies. So we're seeing a lot of VCs in Europe and the US seeding African companies with the hope that they can grow and of course grow cross-border across the continent. So I think for C-stage companies, things are really positive. As Bab said, once you get to growth phase, once you get to economies of scale, it's quite hard to kind of garner the funding that is needed to really grow cross-border across Africa. We know how expensive it is to start and scale a company on the continent, especially given the different nuances of the different markets and countries here. So yeah, I would say now companies should be looking at different metrics. Typically, you can kind of raise money on growth. Now it's really important to look at the unit economics and really focus on positive unit economics from the beginning, even at seed stage. And we've also seen fintechs focusing on profitability. Typically, we know seed stage companies or fintechs are not profitable for the first 3 to 5 years. But companies like mine have really been focused on generating positive revenue and positive cash flow sooner than we should have, just given how the markets have changed recently.
Very interesting. Partner, I'm going to ask you point blank. I don't know if this is a fair question to ask you, but do you think that African fintechs are in a bubble?
It's an interesting question, but I think we should link it to the winter season, which is loading. So if you look at what is happening or what has been happening, let's just take last year, July to March, about 9 months period. We've seen that in terms of funding, we're looking at an average of 300 million per month. Now that is dropped to about 240 million. So that's a significant drop. That could almost like point to say, is the winter season loading? Is the winter season here? Are we in a bubble? But I think if you put a bit of context to it, just look at the last 4 years, we realize that we've been growing from a funding perspective at an average of about 25%. So Africa FinTech has been growing. Yes, there has been a dip, and that I understand because of the global downturn. But if you look at the opportunity that exists today, I think we don't have enough evidence to suggest that there is a bubble. In fact, what I see is the opposite. If you look at how the fintech industry is exploding today, mobile money across 8 verticals that you're talking about, number of transactions, revenue, you're talking about 20% growth in terms of domestic digital payments every year, maybe until 2025. I don't see a bubble there. I see resilience. I think what we just need to do is to optimize our model. I think for those fintechs who are looking at opportunities, the real opportunity, or they who are solving strategic problems, I think there is an opportunity to even grow at an exponential rate. So there is an opportunity, there is growth. There is no enough evidence or enough data to suggest that there is a bubble. Maybe it's too early. The investment, I think it takes a bit of time to sink in. I've seen big fintechs across the continent, the likes of Chipper or Pay, etc. They're pushing to make sure that Africa is financially included. So I don't see the bubble. I think we're moving forward. We just need to optimize our model to take advantage of what is happening.
Thank you, thank you. Speaking of financial inclusion, Babs, I'm going to come back to you because you said something that I want to pick on, which was the scale of the problems we have to solve are so large. When you look at funding, sort of relative to it, it's a drop in the ocean. But there's been some criticism that fintech companies, especially with regards to financial inclusion, in that they're serving the same players that traditional players do. Do you think that's sort of fair to levy at sort of fintechs, and maybe help, as part of your answer, also just help us understand what fintechs are doing to extend and expand financial services to the un- and underbanked?
Yeah, I think the key term you mentioned is just not just unbanked, but underbanked as well. Financial inclusion is not just the fact that you don't have a bank account. You can have a bank account, but you may not have access to the full variety of financial services that are available. I mean, the way I look at it, and the reason sort of Kuda started in the first place, is because, I very much believe strongly that financial services within emerging market, it felt like a preservative of a very few people, a niche population, which typically was made up of HNIs, big corporates, big government. But in actual fact, if you look at it in terms of sheer numbers, almost 90% of the population were excluded from a lot of the services that they could have access to. So for example, you have companies like ours, like Kuda, we offer not just bank accounts, we offer microcredit, we offer access to trading, stock trading, wealth management. So not only are you able to do your transactions locally, but you can also have access to fractionally international stocks, which contributes to wealth expansion, and a whole load of other products. But there are also fintechs that are addressing specifically unbanked. So I think it's slightly unfair to just say, fintechs are capturing the same customers. Yes, some are addressing the same customers, but offering different services. If they were offering exactly the same services to exactly the same customers, there would be no adoption, there would be no fintech. So I think just the fact that, we have fintechs that have millions of customers shows that there is a need. And I think, and I also think actually there is also an opportunity to kind of collaborate, because at the end of the day, it's about the customers. I don't think one entity or group of entities, can serve the customers in totality. It's kind of like a stakeholder scenario where, if we all come together, they actually provide a better opportunity and probability to serve the customer in totality, rather than the way it's kind of fragmented at the moment.
And I want to come to you now, because Babs mentioned collaboration, and you are, I think, how would I put it, an interested party in ensuring that all the stakeholders collaborate. How do you think partnerships within the ecosystem will help, particularly with this question of financial inclusion? How do you see partnerships helping across the ecosystem?
I believe it is essential, and what I've observed over the past couple of days is that all stakeholders are now having the same understanding. You know, fintechs are coming to the landscape with innovation, agility, value to consumers and to the broader ecosystem that is second to none. You know, the fact that they can aggregate data, leverage technology like machine learning, AI, and more, brings definitely value to the landscape. That said, you know, the formal financial ecosystem brings capital, brings skill that is much needed and beyond. I guess the trick is really how do we integrate everyone into an ecosystem that is going to lead to access, that is going to lead to security, because we're talking about payments, and that is also going to link to governance and compliance with the regulatory landscape. So partnerships is definitely needed. The question is, how do we facilitate that integration to accelerate access and value to the ecosystem?
Mara, I'm going to come to you because I think your business is focused at primarily the unbanked, at least one part of your business. Can you just speak to what that looks like, how you are helping to bring more people into the financial system?
What we're trying to do is that to jump on this partnership and finish with your question. We partner a lot with banks, trying to help them digitalize the services and make the services accessible to the population. For example, today we have more than 50,000 agents in 14 countries. And in one country like Senegal, where we have more than 1,000 agents, we were working with a bank. And with these banks, we succeeded to do in 1 year and a half what they did in more than 15 years in terms of agents, because we helped them bring many new agents that and from now people can go to this agent, do cash in, do cash out, and maybe access to all the other services like money transfer, etc. What we try also to do to help this financial inclusion is that we help digitalize solutions, needs that are not digitalized yet. For example, we today for many schools that used to accept the cash for payment, for scholarships. We work also with women that are selling fishes, and they need just to have the credit from the banks, from the microfinance company. But since all these processes are not digitalized yet, we digitalize them, and we include these solutions in the apps of our partners. Today we were partnering a lot with banks. We were partnering with mobile money players. If you look at some apps of the mobile money players, you have many services that you will see. You want to see in touch, but you will see that. But for those who know, these services are provided by InTouch. So we help digitalize this solution and bring as many channels as possible.
Thank you so much. We're going to switch gears a little bit now to the topic of regulation. And Pardon, I'm going to come to you. You are operating in several different markets, so you're a pro at regulatory engagement, I would assume. Can you give some of your reflections on how you do that across several markets? Because we hear, one of the things that I think there was a panel earlier on about AFCTA and the fact that you have different sets of regulations depending on the jurisdiction you're in, and that's a big issue when it comes to operating on the continent. Can you just give maybe a few thoughts around how you engage regulators across multiple jurisdictions?
Yeah. Let me just provide a bit of color or context in terms of our business so that we appreciate the platform or where we are coming from. So we have got presence in 7 African countries, and we're also in the UK and in the US. And we are also offering a number of products and services in a given market. So from a licensing or a regulatory point of view, we're not just interacting with one regulator. We're looking at a number of regulators in a market. So if I take example of Uganda, we've got 4 or 5 licenses, right? That gives us opportunity to offer a number of products and services. And we're expanding rapidly across the continent. So regulatory engagement becomes an important word for us. It is a multi-pronged approach. It's not one size fits all. We've got 54 countries in Africa. They're at different levels in terms of regulation, EDC. So our approach is market dependent. It depends on the market context. But what we've seen generally is that we look at a number of platforms that are available to engage with the regulators. This is a good example of a platform. I was talking to our governor for the Central Bank of Kenya some couple of minutes ago, just to get his views, what he's thinking in terms of fintechs in Kenya, in Africa. I've been talking to the governor of Rwanda, Mauritius, and other regulators. So these platforms, they give us an opportunity to understand, right, what is happening, all the expectations from the regulator. So that becomes one approach to say, how do you engage given platforms like this? Number 2, we also look at different approaches where we engage directly with the regulators' teams, just to understand their expectation, their regulation, especially if you're offering a number of products. Fintech is not very clear in terms of regulation. Some markets are trying to catch up or to understand different dynamics. So the moment you engage the regulator and say, what are the expectations? How do we play in that space? It makes a big difference. So that approach has also helped us. What we have also learned is that before entering a market, we would look for a legal advice or a legal opinion. There are people who are already specialized in those areas, who are talking to the regulators, who understand the different regulations, who would start there just to understand the context and the regulatory ecosystem to say, if you're looking for this particular product, it could be stock brokerage, for example. This is the particular regulator that you need to address and the expectations, so that when you start the engagement, you're not starting from level 0, but you have got a level of understanding in terms of their expectation. So it's not one approach, it's a multi-pronged approach. But the most important thing is, how do you collaborate with your regulator? What I've seen, I think it has worked for us as we open a number of markets and as we launch a number of products. If you look at our products, some of them, they are the next generation financial services. For example, I'm offering fractional stocks, right? How do you go about it? You can only understand the regulatory environment if you engage the monetary authorities, just to get the sense in terms of their expectations.
Perhaps, same to you. I know you said you're in the UK and in Nigeria. How do you think about regulatory engagement?
Yeah, just like Pardon talked about, you literally have to have different approach for different jurisdiction. But I think the fundamental requirement is dialogue. You have to engage, and you have to understand that regulators are there to protect the consumers. You know, as fintechs and you know, as B2C companies, we're there to serve the consumers. So actually, if you think about it, both sort of fintechs and regulators are actually aligned in their mission to serving a particular audience, which is a customer. So I think a lot of the friction happens because there isn't enough dialogue. I think generally innovation moves a lot faster than policies. So again, that can create dialogue. And you know, to be fair to regulators, there have been examples where certain legitimate or perceived to be legitimate companies have been anything but legitimate. And you know, again, we don't have to go far because even in recent times, you know, we've had, you know, a lot of sort of blow-ups with companies that we all looked at as credible, and consumers have ultimately suffered. So I think it's very important to kind of, you know, as a company, to work very, very hard to remove yourself from the non-credibles in the eyes of the regulator. And that's where the dialogue comes in. You know, what we do whenever we want to launch a product, we kind of let the regulator know and ask them for their opinion. What do they think? Where are the pitfalls? Sometimes they don't understand some things and they've seen it elsewhere. We give our own views. So it becomes a kind of way to sort of work together and collaborate. And I also think, you know, one thing that I've noticed personally, I think there is, and with all due respect to sort of fintech companies, in terms of maturity, companies themselves are young. A lot of the individuals behind the companies are young. So there is clearly a generational gap as well between thinking and outlook and how we see life generally. A lot of the regulators, again, with all due respect, are very wise, have been there for a long time. So that generational gap needs to be bridged. So there needs to be more effort on both sides to understand what sort of each side is trying to achieve. But for me, I'm very optimistic. I believe, you know, because the sort of what we want is aligned, you know, so we just need to find sort of that middle ground where we can both get comfort, where we can innovate and the regulator can be comfortable, and ultimately the consumer wins.
Absolutely. I was taking notes as you were speaking, and I think the idea of aligned objectives is something that everybody in the ecosystem, you know, whether you're a fintech or a telco or a bank, or I think that whole thing of we're here to serve the consumer should sort of guide our modus operandi. Jessica, I'm going to come to you. Pardon mentioned that, you know, part of the, part of being here is engaging the regulators and so on. So I think this provides an excellent platform to sort of describe, you know, what regulators can do to support African fintechs as they scale and grow across our markets.
Yeah, absolutely. Well, we're a year and a half into our journey, so much earlier than Pardon and Babs. But I think for us, just engaging with regulators at the beginning of our journey has been super beneficial for us. You know, it's been important for us to fully explain what we're doing for them to understand the essence of what we're trying to achieve. And I think what we've seen is a really enabling environment where they have sandboxes which we're able to operate in some countries where licenses may take 6 to even 2 years at times to acquire. higher. So we've been able to freely operate in markets where those licenses may take a bit longer. I think also having forums where we've been able to have open discussions about some of the innovations that we want to bring out. As Babs mentioned, technology and fintech companies tend to move faster than policies are created. So I think it's really positive. It's been a really positive interaction on our side of a lot of regulators, particularly in East Africa and some in West Africa. I think, just looking at how sophisticated Southern Africa is, it's been easier for us to acquire licenses in those regions. And I think lastly, just keeping the dialogue open. I think it's been really positive, this platform. I've also had a few meetings with regulators here and, just sharing ideas and exchanging what we'd like to do and what the parameters of their laws allow us to do has been really valuable. And I think just keeping that open, free communication is really valuable for companies like us in order to be able to scale quickly into their country and beyond.
Wonderful. Thank you so much. So I'm going to ask each one of you, and I'll start with Ida, sort of your closing thoughts and sort of final words. If we, I think the good thing is we're in a market where the scale of the problem is large. We have a lot of innovation trying to help solve our problems. I think one of the things I am super excited about is just the fact that digital has enabled us to really, solve, and this is technology that we've built on the continent for our problems. Even though the external macroeconomic environment may not be as favorable, even though there might be sort of wintry times. I don't think it's exactly going to be winter, but there might be wintry times coming ahead. I think there's a lot from what I've heard to look forward to. So any sort of final words, how do you think fintech should be navigating the next sort of 12 to 18 months?
That's an interesting question. When you look at the amount of cash that we need to digitize in our region, right, as a starting point. I was sharing earlier how every time I go into a given market, what I do is actually go into a market where payments is happening and spend time with the small merchant or the micro merchant and understand how they operate. In markets where there is what we call payment sophistication, or that where financial inclusion is perceived to be high, you still have tons of cash.
What is your estimate, actually? Because there's always a debate around.
The numbers varies according to what data you look at, but I base my assumption on, or my assessment, I should say, on my experience on the ground. I go into a market in Kenya. I ask, 40 merchants in that given market how they're receiving their payment and how they're making their payment. About 50% still tell me they receive payment in cash. Mind-blowing. I was in Ghana last week, went into a market and talked to the lady selling, material and stuff, and I say, how are you receiving your payment? 80% in cash, despite the phenomenal work that the mobile network operators have achieved in terms of driving access. So as I look at our continent and at the potential, I am a believer that there's tons of opportunities. Yeah. When we look at the population that is banked but underbanked, the number of solutions and products that they have are between 1 and 2. Look at the depth that we can bring in terms of financial services. So when I look at this point of departure, for me, the potential remains huge, and fintechs have a unique role to play. The thing that I'm seeing is that as the technology enables that access, right, and services we make available, it is foundational to drive sustainability and make sure that these fintechs, are equipped to perform and to grow. We're talking here on the panel about to fintechs that are perceived as unicorn, kind of. But think about, the hundreds that are out there and building capabilities that we need to ensure have access to the right technology, the right, governance, understand, what it takes to do proper KYC, understand what it takes to do proper monitoring of the transaction to be in line with where the industry requires that we are. So again, we need to make sure that we include them into the ecosystem, but give them the ammunition to shine and to grow.
Thank you, Babs.
So I guess by difficult times, you're referring to mainly access to capital. And the reality is, there are different ways to build companies. So in recent times, it's been done with sort of more access to capital, foreign capital. Now, even without access to such capital, the problem that we're trying to solve, it hasn't gone away. It's still there. So what it means is, the mindset will need to change in how to tackle that problem. So perhaps in the past, some of us that maybe started 3, 4, 5 years ago had the privilege to sort of get capital and focus and accelerate growth and try to cover ground more quickly. But there is an alternative way to build, which is more organic. It's not as fast. It's not as competitive. Because when everybody has money, it becomes this kind of competition, for customers, for talent, for everything. So I think that era will slow down. And personally, again, this might be controversial. I don't believe everybody should be building companies. Some people are super talented and should work in companies trying to solve specific solutions, specific problems. So I think we're going to get to see more of that. So there's going to be more available talent to work with the right founders to build some of these companies. That would also, I believe, improve corporate governance, because again, we're talking about the right people to build companies. So it's not just about the talent, it's also about the corporate mindset. It's also about the ability, especially talk about fintech, is the ability to converse and sit at the table with regulators and command the respect for the industry as a whole. And also, corporate governance, managing boards, all of these elements is what contributes to building a good foundation for a proper business, especially a consumer-facing one. So the other thing I think we'll get to see is more collaboration in terms of either a merger, a partnership, an acquisition. There's going to be more of that. Because the problem still exists, the building will not stop, but there will be alternative ways to get the funding required. And that's assuming the global funding comes to a halt and local funding doesn't sort of take on that position. But again, I think Pardon was the one that mentioned it. It's slightly early to know if there really is a problem in terms of access to funding, and so maybe we're still going to have good weather and there's not going to be winter after all.
Omar?
It's a tricky question for the for startups. What is happening? No one can tell you what will happen in the 2 coming years. Who would say that these last 2 years would be like they are today? And so we have to prepare ourselves as startups. And during your presentations, you said something very important. focusing on value instead of valuation. This is a tricky question for a startup because we have this pressure to scale. So we are seeing all these opportunities and we need funding. But the more you raise, the more you are diluted. How will we face that? Will we have to stop raising funds and have to grow organically? And so we want to solve all the problems that we are seeing and we want to capture these opportunities. If we continue raising money, we need to do it in a smart way. These tools exist. When it comes to VC, I think that we need now to use these tools, quasi-equity, so including debt, which is another problem for a startup. A startup handles not easily, doesn't handle easily debt. We need to leverage on stock options, helping the founders to be able not to be diluted when they reach the results, the objectives, and other tools that exist. But we need to use these tools today if we want startups to continue growing. But my advice to all the startups would be, yeah, let's just stick on creating value. We don't know what will happen yet tomorrow. What happened 2 years ago with the valuation that we were seeing, I think that it won't happen again. This crisis has opened the eyes to all the investors, and so we have to manage very carefully cash now. We have to manage cash.
Yeah, I think the question is, is winter coming for fintechs in 2023? I think for me, I have quite a positive, bullish outlook on 2023 for fintechs. We know that by 2025, half of the world's working population will live and work in Africa. And we're currently undergoing modernization and digitization as well. And all of those things combined mean that we need solutions, especially as more and more people are coming online in Africa. Now, where I will agree with my colleagues here in saying that we have to be a bit more cautious, I think us as a company, looking at runway, looking at burn, these are all things that we're paying more close attention to. I wish I raised my round. We're doing our next round of funding. I wish I raised it 2 years ago when the valuations were what it was. But I'm still really positive about, the future of fintechs on the continent, just given the insurmountable growth we've seen, given the fact that internet penetration is growing and consumers are becoming more bullish, more sophisticated and more demanding, rightfully so. So that creates opportunities for fintechs like Clasher and my other colleagues on the stage to grow really quickly, but also focus on the value that we're bringing to consumers. One of our North Star metrics at Clasher is TPV. What is the total amount of transactions we're processing? For me now, that's a vanity metric. We're actually looking at what is the bottom line, what is the revenue, what is the CAC to LTV to payback ratio. And I think those are the things that are going to really help companies, grow and become sustainable as markets change in 2023 and beyond. Thank you. Adam.
If you look at the continent, I think we've got a number of problems that we need to solve. I think half of the population is not banked. Only 10% of the population is insured. If you look at the cost of moving money across the borders, is still very high, around 8.9%. We need to drop it to around 3%. There is a lot of friction. There are a lot of problems that we need to solve. If you look at the size of the market, 1.2 billion person market on the cusp of digital transformation, it presents a huge opportunity for fintechs. I think the time to tap into that market even more is now. I know there is a constraint in terms of resources, but I think this presents an opportunity to say, how do we utilize the limited resources that we have? How do we optimize our business models? How become more effective every single day? There could be an opportunity for consolidation. We should be talking about profitability and also have a long-term view of the continent. I think the future is looking good, and the future is Africa. I think we just need to optimize and be prepared to tap into the opportunities that are available.
Thank you very much. I think there's been a lot said here. If I just reflect on some of sort of key takeaways from the speakers, I think one is that there is a ton of opportunity. The scale of problems we have to solve, we hear about cash usage, we hear about insurance penetration, we hear about credit penetration, and so on and so forth. We hear that perhaps we need to change our mindsets a little bit in terms of how we think about growth. You know, perhaps more organic growth is needed. Perhaps in terms of funding, we should think about new instruments. One thing I really liked is this idea that we have to have aligned incentives. We're trying to serve the consumer, right, regardless of what side of the table we're sitting on. And this whole idea as well that, you know, no one knows tomorrow, no one knows what 2023 and beyond will hold. And so we need to prepare ourselves for fintech. So please join me in saying a big thank you to our panelists. Thank you very much, Ida, Babs, Omar, Jess, and Pardon. And it's my pleasure now to invite the chair of our session. So thank you so much. Go back. Governor Njoroge from the Central Bank of Kenya, where we're going to have a quick discussion around fintechs and innovation in Africa. Welcome, Governor Njoroge. We're going to sit over there. Wonderful. So the first question I'm going to ask you is really around innovation. We've heard a lot from the speakers around the scale of problems we have to solve on the continent. I know a big thrust of the Central Bank of Kenya is sort of using innovation to help solve some of those problems. So can you speak a bit about sort of why, why that is? It's right there on your website, why innovation and some of the things that you are seeing that is sort of helping to solve, changing the face of financial services in Kenya.
Thank you very much. But first, I have to say that I'm very excited and, in a sense, very positive, given the conversation that was here a moment ago, you were talking to fintechs, innovators, and their mindset is completely different from, say, fintechs 5 years ago. We can discuss that. But I think it revolves around this thing of innovation, as you said. Innovation is key. If we are going to move ahead, we will need to innovate. The scale of problems, as was mentioned, is huge. The problems in our economies, the problems that our people have to deal with are mind-boggling. And if we could just apply our mind using the tools, the techniques that we have, fintech, you could probably come up with a solution to those issues. So in a sense, it is this sort of clear sense that what we have to do is to solve the problem of the population. And I think they really articulated this. And I guess 5 years ago, that wasn't the case. They were more fixed on DLTs and explaining to us about blockchain. All those things don't solve problems. So I think we are aligned, and I'm very excited about that.
I have to ask a question. Do you think the attitude of the regulator has changed as well? Because, you say
Sure.
they've changed. So it'd be good to hear, have you changed as well in the last 5 years?
I think all of us have changed, for sure. I think at the beginning, regulators were slower, and I think that was also described here. And maybe not across all jurisdictions, but regulators, in a sense, may have had some sense of suspicion. And suspicion because some of the people that were coming through were not exactly interested in being regulated. There's a long story which I could tell later, but about people wanting to get somewhere, but in the end, them not wanting to get there. Well, it's a long story, we'll leave that. But I think the point I'm trying to get at is that 5 years ago, there was this sense that regulation doesn't matter. We have the solution, just accept us as we are. And I think even in the financial world, the regular traditional financial sector, or sector, before the global financial crisis, there was that sense of self-regulation. We can do everything, the new, brave new world sort of sense. And we saw the, I guess it was all hubris, and we saw the end product of it. So I think there was that, and I would call it suspicion. And so the regulators have changed, and I'm happy with that.
And what is your advice to, because I said a little earlier, people always ask me, what do you think is going to happen to regulation and so on? What is your advice to fintechs on how they can regulate, how they can engage regulators? Because especially, I think there were 2 points that were made that I thought was interesting. One is this point around the generational gap, right? And sometimes it is not as easy to have that dialogue, even though you might have aligned incentives, but sometimes things are lost in translation. And then sometimes, especially for the younger or earlier stage companies, there is a sense of, actually, I don't know if I'm big enough to be talking to a regulator. So maybe, do you have a few words of advice on how they can approach and dialogue with you?
Maybe I should say that I'm not quite, I don't quite agree that there's a generational gap. There may be a mindset gap, but I don't think it's generational. I think if we all want to do the right thing, it doesn't matter what generation we are in. So I think I want to start there. But I think what needs to be done is to engage, first appreciate that there should be regulation and understand why there should be regulation. It isn't just to stop, there's that expression, well, maybe years ago, there used to be an expression about the University of Chicago, right? Some of you have gone there. University of Chicago, where fun goes to die, kind of thing. I don't think regulation is killing fun or killing innovation and things like that. So let's understand why. And I think in a sort of a thumbnail sketch of this, we could say that what we are trying to do is to protect the consumer, also minimize the risks that are there. We want to maximize the opportunities while minimizing the risks. So once it's clear that you need to do regulation, as they explained, go to the regulator, find out who the regulator is, and engage with them, asking, we have this product, and this is what we intend to do. Quite often, as I have, from our experience, they are not fully clear how that product will actually work. We get a lot of people coming into a jurisdiction or trying to come into a jurisdiction, well, they haven't actually had a product in any other jurisdiction. So maybe we get those first-timers, unlike the ones that were represented here. Cheaper is in several jurisdictions, etc. So work with the regulator and understand what the constraints are. And then understand how to resolve those things. I think most people understand now, most regulators understand that there is a place for the fintechs. And if they are well regulated, there shouldn't be any concern. It will be better for the population.
So, sir, what is your prediction for African fintechs? Is winter coming or not?
Winter? Okay, I don't know. That's a complicated question. I guess I would answer as follows. First, I don't think, I think there's been a sort of a, I don't want to call it a shakedown, but a sense of unsettling, yeah? In the conversation this morning, I talked about how we were measuring success before, how much money you have got from the VCs, the valuation, etc. I don't think those are the correct metrics to measure the success of a particular institution. I think the correct metric has to be related to what problems you are resolving, etc. Sure, value will come in the end, right? So it's solving the problem. But what has happened now is there has been a change even in the advanced economies in terms of the appetite for investment in this sort of ventures. And also there has been, let's say, the bad stories that we have seen. So all these have shaken us. We are all in the same world. I don't think it is a winter sort of issue. I think of it more like there's that story about an eagle, right? After 40 years, I'm told that an eagle can live for 70 years. But after a while, the eagle gets old and it has to, its talons are blunt, it cannot, and it is old, it has terrible feathers, etc. So it has to go off in the mountains somewhere and end up, renewing its beak, breaking its beak, and then also its talons and, changing, molting, etc. And after, I don't know how many months of that, it will again come out anew and soar. So I think of this as a sort of a checkpoint of our fintechs. And they have to understand the moment and come out of it sort of stronger, more agile, ready to do work for the consumers, and I think it'll be great.
Wonderful. And on that note, thank you so much for this discussion, and thank you very much once again to our panelists. Thank you all very much.
Thank you very much, Maria.